guys, welcome back. This is Neo. Welcome back everyone. Hey, this week has been amazing. There have been many Q1 2026 results, and some other companies may not be Q1 but then could be Q2, Q3 or even Q4 already, depending on how they go about their fiscal years. Today we're gonna talk about two different kind of company, two different categories of companies. One is software based, the other is AI infrastructure related. So guys, these two separate group of companies both have reported very great earning result with amazing strong revenue growth. However, their stock price reactions are completely different. Let's take a look at SoFi. We love SoFi. I love SoFi. In my biggest portfolio, I have 4 accounts. I have 4 portfolios. In my biggest portfolio, SoFi is 1/3 of it. SoFi is almost, actually no, slightly less than 30% now. Yeah, or actually just 25% because the stock price have crashed basically from 32 to now just half to 16. So as you can see now, SoFi Technologies, $16.30 per share. 6 months ago, it was right here, 32.50. OMG, right? 32.73 actually, the height. What happened? What gives, right? Q1 2026, SoFi reported 43% year-over-year revenue growth. But however, the market did not like it. It is in the software industry. It is classified as software because everything is within the app. When we look at SoFi, ServiceNow, Palantir, Apploving, all these great growth company. And by the way, Palantir and Apploving were both in my portfolio, my biggest portfolio last year. But then both of them have continued to surge so much that their share prices have reflect extreme overvaluation. That's why I had to sell both of them. Let me give you a little background. I bought Apploving 5 years ago, $40 per share. Actually, not 5 years ago, within the last 5 years. That's what I'm trying to say. Someone is smoking outside. It's very strong. My God, my new neighbor is smoking a lot. I hope I'm not trying to judge people, but we are giving a very good body with good health. People don't waste it. Okay, cherish always what we have, both financially and for our health too. Okay, let's go back here. Let's focus. I bought it at $41 to $47 per share. Okay, at first. Okay, I always say I start buying it at $40 to $41 per share because that was my first purchase of their shares of Apploving. Did I not know that one day Apploving will be huge? Of course I know. Based on the advertisement trend, based on the gaming trend, based on how many new advertisement company we're going to partner and talk with Apploving, and I always listen to what CEO of the company say, Chief Executive Officer, CEO of the company, not analyst. None of the analysts in 2024 were pricing the future growth of Apploving. One analyst said Apploving was only worth $22 per share when it was $30+ per share. There was an analyst giving Apploving $22 per share. What are they doing? There is a phenomenal growth ahead. And it's not even that far ahead when you look at gaming. And when you look at the trend, and when you look at how much much time they spend per day for gaming and looking at the advertisement, you notice something, will be growing huge. And Apploving is just there. The company has control of all the data, both incoming and outgoing, all the advertising slots, and can use AI capability to fill out all the slot in real time, and how many players are playing which games and at what time and how long a duration, how much time they spend in watching each of the advertisements. It is just amazing. See, if you have the insight and foresight to find out that, there is a huge market growth ahead of this company, you are the winner. You are many steps ahead of even the analysts. Analysts, what they are good at, they have to protect their own jobs. And they cannot give too high a price target. Then if the company always, quarter after quarter, ends up not reaching that high of a price target, then they will not be giving a 5-star status. They will be 4-star, they will be given 3 stars, they will be given 2 stars or even 1-star status. The lower the star, it kind of gives the general idea to the investment community that this particular analyst is not good at analyzing companies. And then he always gives too high a price target. So he is not trustworthy, he is not reliable. His work is not reliable. No, actually no. For me, when I purchased Amazon 20-something years ago, I already priced Amazon over $1,000 per share. And at that time when I bought it, it was only $9.98. Please split. Okay, Amazon has seen 20-to-1 stock split. I'm talking pre-split prices, share prices. SoFi, with such a strong growth, right? When you look at the membership, SoFi is growing left and right. Membership growth 36% per year over year. And revenue, actually not 41%, is 43% for this past quarter. It is actually accelerating from the 38% year over year from last year, same period. It is crazy. And no, because it is within the software industry. It's an app, so it's within software. It's like Apploving. Where is Apploving? See, it's within an app. It's within software. There is no physical brand. So all these company, you see the last 6 months, see the trend. They are trending down. Even Apploving so strong. Look at their latest earning. Their latest earnings showcase 1.84 billion in revenue for the last Q1 quarter, with 59% year over year increase. 59%. OMG, it's crazy. I have been with the stock market for 27 years now. It is not often to see a company with over 40% year over year growth, such as SoFi. And it's not even fewer chances for us to see a company with almost 60% year over year revenue growth, such as Apploving. But then what? After the earning announcement, look, it went down. It went down. And when we look at AMD, right? The other of my greatest company in my portfolio, OMG. The revenue only went up, was it 20%? I think it was 20% or strongest revenue surge up from a year ago, 38%. See, 38%. Apploving was 59%. AMD is only 38%, as you can see here, right? But then guess what happened? Guess what happened? After the earning call, before the earning call was 349. After the earning call, 427. Man, I had 110 shares. I sold 40 shares to buy other stocks, but actually I only have 110 shares now. But I was so speechless, right? I mean, I bought it at $87 per share last year. It was here. Oh, actually more than 1 year now, because it was Liberation Day of last year. Yeah, right here. See, it was as low as 75, and I bought at $87, $89 per share. OMG. And I talked to my coworker, talked to my uncle. Hey, I think this stock is undervalued, should be roughly $140 to $170 per share by the end of last year. Okay? And then, by Q3 of last year, the earning was so good that I already gave end of year projection, $250 per share. And boy, did it not hit my projection. Look, $250 per share, my projection. It was right on, $259. And I let my coworker and my uncle know, this year I'm giving $400 per share based on their growth, of expected growth of roughly 33%. I was expecting 33%, but it's actually turned out to be 38%. But still under SoFi, okay? SoFi was 43%, but SoFi was punished. After earning, it crashed. But AMD, after earning, surged because it is in the AI infrastructure build out, and money are all flocking over to AI compute infrastructure build out. And look, this is such an amazing growth from 87 to 421. So 4.5x return already. 4.5x return already. Just holding it for 13 months. And do I not see AMD reaching over $1,000 per share? Of course. Why not? The number that AMD is giving for this quarter does not even include their next hyperscaler specific AI chip named MI450. And then later on, the more superior chip MI455, MI500, and such. The demand is huge. And AMD has one thing that NVIDIA does not do. They also have made CPU chips. They design CPU chips and all these AI computing chips as well. While Intel designs and make CPU chips with their own foundries as well. So I have AMD stock and I also have Intel stock. Intel is another great story, guys. OMG. You just have to feel good about yourself. Why? Just like you are an athlete, right? You are a good basketball player, you are a good soccer player, you are a great American football player. You know how good you are and you continue to win many games and you feel good about yourself, right? It's just the same with stock investment. Each company that you invest in, at least 70%, 80% of your portfolio turns out to be great investments. You feel good about yourself. Of course, we don't win from every single investment. There are companies which I also see loss. Just like when you have a great athlete, right? He played many games, but he doesn't win all the games. There will be some games that he loses, right? So the same thing with investment. So, but then my winning positions, OMG. The ratio is like the winning AI theme companies that I invest in to SoFi and other companies, smaller ones that are not doing quite well as of late. The ratio is about, I would say, 80 to 20. So by and large, all in all, I still gain a lot. It's crazy. OMG. Wow, it's so crazy. So let's go through these people. Let's go through these. ServiceNow, right? ServiceNow is one of the best Fortune 500 company. They make the infrastructure, secured infrastructure for all the enterprises to perform their day-to-day functionality and day-to-day operations. Even if a company needs to use agentic AI, that agentic AI still need to be guarded, still need to be policed, still need to be monitored autonomously. And that is what ServiceNow do. Take care of the workflow, take care of irregularities, and also if anything happens, attacks from outside or whatever, it automatically start the communication with different layers of functionalities within a company and coordinate and orchestrate all the functionalities, protect, secure, operate, get the work done seamlessly. Crazy. Okay, ServiceNow is probably one of the best company, one of the best software companies one can buy. You look at their stock price from IPO, $4, $5, look, 220, 50x people, just in slightly over 12 years, 50x. And all of a sudden, because of agentic AI, look, agentic AI, people are saying, oh, they can use agentic AI, just type some queries and then ask the agentic AI to do it for them. No, it's not that easy, not that simple, people. Agentic AI can do a lot of wrong things if you don't patrol them. That's what ServiceNow does. Patrol all the operations. Make sure everything goes well without issues, seamlessly, with strong security and automations and of communication between layers of a company. Man, look at these people. With this continued great growth, ServiceNow should be around here by 2027. And this is what? If this is 120 and this is 120, then you extrapolate here 2027. It is more like 360 to 400. It kind of reminds me of AMD now. We just look at AMD. I bought at 87, remember, or 89. Now it is 89 ServiceNow, and I just said this is 320 to 360 or potentially 400. OMG. It could be, but now there is a cloud hanging over all this software company, which the Wall Street is saying, oh, agentic AI will disrupt these companies. I do not think so. There are companies which will be disrupted by agentic AI. But at the other end of the spectrum is there's companies which are benefit with inclusion of the agentic AI within their overall functionality. And ServiceNow is that type of company. People, if you have the insight and foresight, you know what company to buy. And they are giving you at a great discount right now, I believe. Because I think that right now, if you look at the terminal value of all the future cash flow and discount it to present value, I have calculated at 150-ish per share price. But however, that was the base case. That was the case if it would not see growth. It's only maybe 8% to 12% revenue growth, even terminal growth. But what if the company will be like Amazon? It's actually 17%, sometimes even 20% year-over-year growth. Then the terminal value just blow up crazily to the upside. It could be 3x higher, 3x, 4x higher. Then we are talking about not 150 per share. We are talking about maybe 350, 400, even $500 per share. Just like how last year I look at AMD. And I already told my uncle and my coworker that I was giving AMD a $400 per share price target for 2026, and it was last year. Now, if I say it now, after the fact, after I have seen all AMD great earning result, of course, then I'm after the fact, then I should not be trust. But I foresee this happening. I foresee these things to happen already. I have foreseen the growth of AMD already before all the analysts realize it. So what are the analysts good for? They are good at looking at numbers. They need real numbers. They are not imagining it in their head. Unless it is Tesla. They can do a lot of crazy imagination. Oh, one day with a lot of robots, Tesla will be a 50 trillion market cap company. They can imagine that, but they cannot imagine company like AMD 1 year ago, where they will have increasingly more capable AI hyperscaler specific chips that not only rival the Blackwell Rubin chip of NVIDIA, but surpass their performance at lower price points. They cannot imagine that, but they can imagine when one day there will be huge amount of robots everywhere, Tesla will be great. When Tesla is not even selling one single robot to any consumer yet. So I'm not saying all analysts are bad, but if you want to be financially well, if you want to become a financially well person, trust yourself more than the analysts. Okay, thank you. And that's why I always encourage people, including myself, to do more due diligence. Whatever we find is our funding, is to our benefits. If you and I understand what we are buying, what we are investing in more, then we are more sure about its eternal value and future growth potential. Then whenever other analysts and other people say bad thing about this company, then we know much better already. Then whenever it crash, the price crash, we can buy more shares, right? Okay, now let's go back to here. ServiceNow is like SoFi, wonderful, exceptional execution by management, wonderful revenue growth, such as Palantir. But still, look at Palantir. After Q1 earning report, it drops from 149 to 134. Was the earning bad? Was the earning bad? You take a guess. No, look at that. Palantir Technologies, PLTR, reported record Q1 revenue growth of 85% year over year. 85%. AMD was what? 35, 36%, you remember? Come on, AMD, where are you? Oh, one-stop system, crazy. Another one of mine. Okay, AMD, where are you? See, it was 38% year-over-year growth, and it shot up. See, look, it shot up from 347 to 427, 28. It's crazy. Went up 20% plus. For what? For only 38%. And then you had, at the other end of the spectrum, you have Palantir, jobs from 148 to 134, but with a much faster growth rate, 85%, because it is in a software industry. Once again, see, all the software are being punished. Now, we have to understand, there is what is hot, what is not hot, versus our aim for our channel is for long-term investing. So we do not just look at what is hot, what is not hot. We look at the long-term trend. The trend is our friend. Whatever, such as 20 years ago, you see people will be increasingly more comfortable buying online versus walking inside a store. Then you would understand, oh, Amazon could be the company that would reap all the growth opportunities. And if you had that insight and foresight 20 years ago, you bought Amazon, now you don't have to work, right? So now, why do I have to work? I buy a lot of cars. I spend a lot of wasteful stuff in life. I purchased 2 apartments, and during 2008, I ran bankrupt. I owe a lot and could not find no renters. And then there were special assessment for the building. The roof had to be all completely removed and put a new layer on it. there were a whole lot of things. And then the COA system need to be replaced, repaired, and I did not have the money. I was overextending, buying 2 condos at the same time instead of just buying one. So in life, we made a lot of mistakes. But now, guys, I'm learning a lot. I wish you are learning a lot too. We learn together. I'm sharing all this information with you. Hopefully, you and I will find ourselves great financial freedom ASAP. I'm not here to waste your time. And this AI cycle, look, guys, happened so suddenly. Even a lot of professional investors couldn't prepare for such a big and fast run up. A lot of professional investors, even Cathie Woods. If you have been following Cathie Wood of ARK Invest, ARK Invest, since 2020 or 2021, then you would know that she has been missing out all these crazy surge of a lot of AI companies. In 2022, she sold every single share almost of NVIDIA. After she sold NVIDIA shares, NVIDIA went ahead and shot up 12x, 12x return for the next 2 years. See, she was not even prepared for this AI momentum. OMG. So let's continue. Okay, Palantir 87%, 85% year-over-year revenue growth, and Apploving amazing 59% year-over-year revenue growth. ServiceNow is about 20+% because it is one of the biggest Fortune 500 companies. Even though it's a 20% plus or minus year-over-year growth, which is still a huge lump sum. Okay. And it is one of the best because the profit margin is over 80%. It's crazy. SoFi, wonderful, 41% revenue year-over-year growth. And membership continues to grow, meaning they are taking market share from their competitors. And Forbes, F-O-R-B-E-S, Forbes, had just named SoFi the #1 bank in America. Not just fintech, not #1 fintech, but #1 bank, including all fintechs, if they are banks, in America, okay, by Forbes or Forbes, depending on how you pronounce the word, F-O-R-B-E-S, okay? And now, at the other end of this stock market, we have AI infrastructure theme, AI infrastructure, look at ARM Holdings, right? They have phenomenal growth also. Phenomenal means 20% because they have such a huge, big number of revenue already. So even 20% growth is a lot. Initially, it shot up, but then it went down because of why? Because not enough chips. So company CEO say the company may see shortage of chips availability. So they do not guide very well for the forward earnings for the next quarters. I saw it earlier somewhere. They always change it. Okay, anyway, so ARM is the only one that kind of shot up and then come back down. Other than that, AMD, Advanced Micro Devices, we have talked about it. OMG. Now, whenever it was end of March, right, only 195, and now it's more than double, 421, guys. March was the month with the highest fear for this year. So the same thing happened last year. March was also saw the highest intensity of fear. Remember, we only find stocks at great discounts when there are maximum fear in the market. When we look at the stock market last year and this year, March, people only can see what happens now. They cannot see what may happen 6 months down the road. That is the issue. So if we have the insight and foresight to see all this before other people do. Then we get into the game early and we reap the maximum benefit. So that was the ARM that we just talked about. And this one is ARM Holdings, yeah. How come I have so many of them? What does ARM do? ARM Holdings architects, develops, and licenses central processing unit products and related technologies for semiconductor companies and original equipment manufacturers. The company is involved in the licensing, marketing, research, and development of microprocessors, systems, intellectual properties IPs, graphic processing units, physical IP, and associated system IPs, software, tools, and other related services. It also offers ARM central processing units, accelerators, system IP products, and compute platform products, as well as development tools and software. The company's products are used in various markets such as automotive, computing infrastructure, consumer technologies, and Internet of Things. It operates in the United States, the People's Republic of China, Taiwan, the Republic of Korea, and internationally. ARM Holdings PLC has a strategic collaborations with International Business Machine IBM Corporation. The company was founded in 1990 and is headquartered in Cambridge, the United Kingdom. ARM Holdings PLC operates as a subsidiary of SoftBank Group Corp. Okay, but I do not have shares of this company. I have AMD. AMD, remember guys, I bought it when nobody wants it, when the analysts were saying AMD did not have a MOAT. MOAT is MOAT. What Warren Buffett say is a competitive advantage of a company. They said, oh, they are only making CPUs, which is a dwindling market, and also as well as those chips are too slow for AI compute. But it turns out that a lot of edge AI cases need CPUs. People, if you have the foresight and insight, I always say that you reap the maximum benefits. It's crazy. Even analysts fail to foresee this coming last year. They were saying AMD would not catch up with NVIDIA. They were saying AMD has nothing that can compare with NVIDIA-made chips. Last year, they said that. And now they have to FOMO in all these analysts. And after all these great quarterly earnings of AMD, the analysts today start to elbow each other and increase their target price for AMD. OMG, I already gave AMD $400 per share price target last year. And this year, even 2 months ago, the highest I saw was only 320, I think. Not even 400 that I gave. Even at 320, they said, oh, it was too sketchy. It's too sketchy. OMG, I thought it wasn't enough, it wasn't high enough. AMD will do wonderful. And the MI450 chip numbers are not out yet. It's not even June yet. That crazy AI compute chip will be coming out in June. OMG, can you imagine Q3 and Q4 numbers of AMD? It could well double. It could well double, if not triple, guys. And that chip command a higher profit margins too, by the way. Oh well, I'm seeing 1,000 next year, but I'm only giving it $600 per share. I want to be more conservative. Okay. Same as SoFi, just double beat, not a triple beat, just double beat. And then One Stop System went up 60%. At one point, it was $16 per share. Actually, 64, 65% today. We had share of this company. They are AI edge case computing chip. Okay, it's edge cases only for edge cases such as devices, IoT, Internet of Things devices, You have a robotic dog, robots, self-driving cars, self-driving drones, you know, all those edge cases. Oh, the dog is my audience. Okay. Yeah, after earning is short. So how was the earning? Let's see. Do we have the earning? I think it was 55% year-over-year growth. How come the bigger company they have it but not the smaller one? Do I have it here? Okay, I have it here. One stop system Q1 earnings call highlights. One stop system period Q1 revenue of 8.1 million is a very small company, by the way, up 55% year-over-year. See, just up 55%. And remember, Apploving was 59% year-over-year growth, and one stop system is only 55%. But however, look, after earning report, they shot up almost. They shot up 60%. From just under 10, 9.66 to 16.20. OMG. Wow. But then you have Apploving, 59% compared to the 55% of one-stop system. It is 4% higher. Look, after earning reports. Oh, that was many days ago actually. Up, you know, keep on coming down. So software segment compared to AI infrastructure segment, because of money rotation, right now the hottest sector or segment is AI infrastructure build out. Okay, people. So wow, this is crazy. My account, my second account, has the most concentration of AI infrastructure company names. I have Micron, I have Sandisk, I have Western Digital, I have AMD, I have Intel, I have Vertiv, VRTIV, another great company, OMG, FormFactor, that tests all the semiconductors. OMG, people, I have one stop system, I have Navitas, NIVATES or AS, I forgot. Navitas, and then a couple of smaller ones I forgot. But anyway, this has been an amazing journey, guys, and going forward it will be even more amazing. Now, I'm a small potato, right? If I just say, you know, I know this company, I know that company, you probably just, you know, take it with a big grain of salt, right? And then you should, and I'm sharing my insight, my foresight, the industry trend of the industry, trend of the consumers, and trend of how companies are making their spending. So these trends are our friend. And once we recognize the trend, we know where the monies are flowing to, which company are the best beneficiaries for this big spending of either consumer or private sector or the public sector. Then we should follow where the money go, right, people? So trend is our friend, and if we have the insight and foresight to see the digitizations of commerce 20 years ago, you and I would be holding as many shares of Amazon as possible. And if we see that 20 years from now, people will be doing digitized banking, online banking with their phone, with their AI goggles, then we see that SoFi technologies is the way to go. So nothing that I'm saying is financial advice. I highly encourage you and I to do more and more due diligence for our own portfolios. Okay, happy investing, happy long-term investing, people. This has been a wonderful journey, and some of my stock just one day increased 60%. I have other stocks such as AMD increased over 400% over the last year. People, if we continue to hold what we believe because we understand those companies, trust our gut, trust ourselves, trust yourself. Don't trust me, trust yourself. I'm only here to share information and emotionally motivate you to buy and hold, not buy for short term and then as a trader buy, sell, buy, sell. what are the risks of being a trader? This time you find a great trade, you earn some. The next time you have to spend time to find info, find the company, find which one is in favor, where the money are flowing to. That all requires time. And being a trader is when you see other people having good trades and you are not having a good trade that day, you kind of feel very bad. But if I know in the long term my company will do great, I just sit back and relax. I go play my basketball, I go to swimming, I go to work, I sleep well, knowing that my company is a very great beneficiary of the current trend, consumer trend, private sector trend, public sector trend, AI trend. So I can sleep well. Even today may come down a little bit. I know tomorrow, next month, next year, next decade will be good. So this is long-term investing. And Warren Buffett is my biggest teacher. I always follow his advice. People, thank you for coming back to my channel. I really, if I can help just one of you guys, I fulfill my dreams of helping people already and helping myself too. Thank you guys, thank you. Have a wonderful evening. Amazing journey still ahead of us.